One of the biggest mistakes people make with investing and trying to make money in their pensions, whether they're in their 20s or 60s, is they think it's about tip sheets and getting the hot tip off a newspaper or off a TV channel. Now, I've spent, 3 years doing Bloomberg TV, my two weekly shows, Tuesdays and Wednesdays. There, 250 columns in the Financial Times. And as I've written in my books, it is not about the tip sheets. I'm not just saying that. The academic research proves it. What investing is actually about is asking yourself this when you're buying into a stock, whether that stock's a Walmart, Costco, Intel, IBM, Microsoft, whatever it is, and this is not individual financial advice or tips on those stocks. It is, well, wait a minute, would I still want to own this? And these are the two questions you ask yourself. Time and falls. If I had to hold it for another 5 years, and if it fell X%, would I still want to buy it? Buy more or continue holding it? If it can't meet those two tests, and that's a really crude test, then I wouldn't have it to begin with. The way I filter is not obviously as crudely as that, but it's a pretty good, quick fire, crude way of doing it. The way I do it is I look for companies which are undervalued, high growth, dividend yields, and even then there is zero guarantee that from a year to year you will always have even positive returns. You can even have negative returns, and that's why elongating the time frame is, with good quality companies, is probably the easiest, safest thing most private investors can do. The problem is social media will say to you, hey, let's trade this in and out and do this. You can learn to trade. It's just incredibly difficult, and you're certainly not going to get it off somebody off social media. Okay, they're going to have to be probably a regulated hedge fund manager to teach you, and somebody who's got assets under management. Forget the trading bit. You haven't got the time, energy, inclination. Think about the investing side instead. Be more like Warren Buffett, not George Soros, okay? You could be either. Hell of a lot easier being a Buffett. Elongate the time frame, the quality companies, and have some simple rules and tests. Unfortunately, most private investors say, well, this looks good, I think I'll have a punt. Somehow they've been led to believe that investing is gambling. It can be gambling if you wish, but crossing the road can be gambling if you wish. Just do it with your eyes closed. And unfortunately, with investing, most people do it with their eyes closed. Have a look at the link in the bio. Save this video, like and follow for more, and I'll happily answer questions. Don't DM me. Instead, it's better if you email me. Have a look at the link in the bio, because I look at my emails, I don't look at my DMs. Okay, and beware of people pretending to be me. That's why it's easier if you email me, because the scam artists won't ask you to email them. All right, if you've got questions, but otherwise I've got free books, free courses, free lectures, free articles, free daily